Good evening. This is Ken at Tortoise Capital with a review of the weekend trading reports for August 17th, 2018. Market is in bullish normal conditions. On an annual basis using NDX 260, it's highly overbought at 96. On a short-term basis, it's overbought at 84 out of 100 as well. In the market mosaic, we're yellow bullish with price relative to the 200. The slope of the 50-day moving average is red neutral at 0.27. ADX is a weak, hardly trending at all, 11.3. The risk index is the 30-period moving average of the VIX divided by the 10. 1.0 is the boundary between risk on and risk off. It's reading 0.99 right now, so we just are dipped into risk off for the last couple days. The Z-score of that number is the risk Z, so we compare 0.99 to the last 5,000 trading days, find the average and standard deviation, and compute the Z-score as minus 0.22. Here you see a 90-day histogram of that indicator. We have just dipped into the winter and the warning of potentially sharp one-day volatility events against the primary trend. You see here the holdings of the various portfolios in blended monthly rebalancing, with the next rebalancing due on or about 1 September, and then the current leaders based on closing prices on Friday. Theoretical exposure in ETF2 remains at 40%. Take a quick look at some ETF portfolios. It's basically all the US plus Australia are on buys. Everything else globally is on a hold, and you can see the difference in performance over the last time periods compared to the strong and to the weak. Nice rebound in real estate and in Australia this week. Diamonds did the best among the broad indexes. ETF 32 portfolio evenly split between buys and cash. Strength here at utilities, real estate, healthcare, consumer staples. So kind of the more defensive plays, all things considered. Weakness, Brazil, Latin America, after a period of a pretty good 6-week run, which we nailed with our swing trading. It's reverting back to the longer term form with weakness mirroring that of the rest of the world. In the Dow 30, huge performances in Apple, Pfizer, Merck this past month. This week it was Verizon, Walmart, and Cisco. Walmart's very interesting. That bump showed 2 days of stability, but it hasn't really followed through any further. So we'll see if the longer-term holders buy up towards that number or whether it decays back to the previous fair value. Weakness down here, Chevron, Intel, and GE this week, kind of reinforcing the monthly performance as well. In the sector spiders, about 2/3 on buy signals, 1/3 on cash. Weakness here in the materials, oil, energy, metals, mining. ETF Max, these are the outperformers given a database of about 500 liquid ETFs. Pharmaceuticals remain interesting, as does the Alpha Dex. In the market health check, so the vertical lines are 10, 20, 30 days worth of look back out to 60. The horizontal purple lines are price targets that have held as resistance before and remain upside targets. We're getting close to that all-time high again. The vertical red lines are support levels that were once resistance but now act as support. You can see down here the 200-day moving average. See, the slope of the river is up. The PSAR indicator has flipped down. In the MACD, 4 seasons of the MACD histogram, we are back in the fall at the Bollinger Band mean here, still above the 0 line, so we have a longward bias, but it has been decaying a couple times, whereas in the spring and summer you had that nice rebound and an orderly move up. Now it's starting to chop a little bit. That's characteristic of the fall, but we still have a long side bias. The slope of the 30-period regression line is up. That's from black dot to black dot. The 10 has pulled back a little bit, slightly negative. But we had a good close on Friday, and it won't take much to flip that PSAR once more. If it gets through that black dot at 286, for example, up we go. ETF2 regional report. 4 out of the 6 broad indexes are on buy signals. That's all the U.S., and the strength is tech, small caps, large caps, then mids. Weakness everywhere else, with Latin America and emerging markets really suffering. You can see in the sector spiders the big winners here. Utilities, tech, staples, healthcare, and discretionary. In the world market model, the U.S. generally above average with strength at the outside endpoints. Growth doing very well. Europe and Asia, a mixed bag. Only Australia and India looking positive there. U.S. real estate standing out among the other asset classes. Canada, Mexico doing okay, but Brazil and Latin America have reverted back to their long-term form. ETF top 30. These are based on the highest performers under the strength column. And green is a long-term winner. Green and white, it used to be good, is now great, and so the opportunity to exploit some new strength may be there. So consumer healthcare select, staples, minimum volatility fund, and low volatility portfolio for the S&P. Shift into the daily. No signals in channeling and overreaction. You can see the 10-day max pain leaders here. Half a dozen signaling on the auto framer. On the RSI2, Intel looks compelling. So Intel's been smashed on 10 days, 1 month, and 3 months. It has an RSI2 value of 1. Been very volatile. Tests out at 3-to-1 on the auto framer, is a max pain candidate. So Intel is certainly on our short list of interesting symbols. Let's take a look at it. So you can see why Intel is so interesting. It's at the end of this retracement. So there was a big gap down, recovered back to the Bollinger Band mean, failed all the way back down to where it held before on a bottoming tail. So all of those hard-fought gains are now gone. It closed well, but it breached the PSAR support level here. And you can see we're a great distance from the RL270, which has just rolled over. The PSAR just flipped. So this is a symbol that's prepared to either, from this critical state, collapse another one of these legs down, or find support and rebound back to the Bollinger Band mean. And so I'm prepared to frame this one in either direction. I'm ready intraday to pile on any signs of weakness, particularly if the market is bad and technology is worse. And then I will build that into a swing trade. You can see here that it has recrossed its 5 EMA back into the winter and collapsing. So this is one that's certainly on the downward move here. Shifting to the ETF 30, then plenty to choose from on the auto framer. Nothing on the RSI2. Lots of good frog quality numbers in here. Brazil got smashed along with VIX on Friday. Metals and mining gave a one-day nice pop to reverse that 10-day, 1 month, and 3 month trend. So XME may have some follow through. It has a low has a high frog quality number and a small frog standard deviation in order to get well started during the day. So let's take a look at that one. And so this one would be very attractive to me. It's first of all, it's clearly in the winter, so it's the signal line is outside of the 2 standard deviation envelope even, and below its 5 period, and the slope is down. But it's had a bottoming tail, found support Thursday, had a nice rebound on Friday, but still is a considerable distance to its long-term fair value at 38, as measured by the RL270. Now so I'm ready to buy any improvement here with a stop just below the 1-day low at that support level, and I'm going to target getting through the dragon, then to the PSAR, then to the Bollinger Band mean. By that time, the PSAR would have flipped, and then the move would be to the top of the dragon, and then up to the long-term fair value. Conversely, if this fails, there's plenty of reasons to believe why this could fail further. So this is in an ideal state. The fact that there was strong buying going into the weekend and held over the weekend is a very favorable sign. Wouldn't surprise me to see similar patterns in Alcoa. That's already on the PSAR flip to the upside and in the spring. That one's easier to believe in, and still a long way to go to fair value if we saw Caterpillar. 1-day pop, this has been a 1-2, and I know the guys in the chat room got some of this on Friday. That's ready to flip the PSAR, then back up to 156. The Dow 30 in really good shape here, as it's back to fair value and free and clear. I mean, there's no resistance overhead, so that one's easy to believe in. The PSAR just flipped. It's above the dragon, above the river Bollinger Band mean, and that's all sloping up, and volatility is declining, as you can see by the compressing Z3 line. So this is very favorable in the Dow. The opposite of that is Brazil. This is that nice swing trade in Brazil we got when it went from the winter to the spring, then to the summer, and then finished up. And now here's where it goes into the fall, protected us against this. Just went into the winter now, so really the downside target on Brazil is like 31.80, so there's still more room to fail. So if that little doji collapses, that's an auto short. Second position if it violates the swing low down here at 31 and call it a half. On the upside, fair value still 37.5, but it has to get through the dragon in order to do that. Healthcare has been on a tear. What I want to illustrate here is that when it goes from winter to spring and then crosses into summer, that's a very strong signal. When it comes back below its 5 EMA and then crosses back above, that's a very strong signal. It did the same thing here. That's a very strong signal, and it's been just out of sight, out of mind, and continuing to March. I would reward that with an additional position if it's up and it's better than the market. Right, back to our report. We'll just finish up quick here. Pinch and stretch, plenty to choose from. Pfizer has been leading the way in that healthcare sector. It's a 2.3 sigma stretch above its Bollinger Band mean. Walmart was the anomaly because it had that big spike on earnings, but Apple has resumed its upward move. Lots of good tech, but Procter & Gamble as well, joining Pfizer in the healthcare and consumer staples area. Lots of super pinches to choose from. Pfizer, Apple, and JP Morgan have had the exceptional moves. Morgan's is just starting to be exceptional, but Pfizer has really had an extraordinary run. And that's what that looks like in Pfizer. And still room to go. You know, from that Z3 pinch, the super pinch back in July, early in July, it's gone from 36 to 42. That's a 15% gain and more to come. Its partner in crime, Procter & Gamble, not quite as impressive, but still substantial and pushing the boundaries upwards. So there's still more room to go in that healthcare sector. Auto framer with all the mechanical framing data on there. And the regression line fractals showing in the top shelf the symbols that are most ATRs below their long-term fair value. So you'll see some of those industrials like CAT and Home Depot there. And then in the red, these are the most ATRs above their RL270, and that's giving you that a lot of that healthcare with Merck, Procter & Gamble, Coke, Apple. Lots to choose from. Many to choose from in the squeeze chart as well, based on relatively narrow range on Friday. These are the ones that are poised for one-day pops. There's Home Depot, Disney, Verizon, Devon Energy. So some of our long-term favorites are all well postured for big one-day moves. In the Four Seasons of the MACD, you'll see the Dow 30 expressed here. Nothing was in the spring, so there was nothing below the zero line, but moving upward to the zero line. Everything is already in the summer. These are organized by season and then by where where their z-score is inside the z-score river down here on the MACD. So something that's at 2.78 like Walmart would be in the summer, and it would be well above its own red river down in the MACD histogram. So something like Chevron is in the winter and failing and well outside its river, and this is what Chevron looks like. So you can see Chevron is outside of its river. It's across the zero line. The slope is downward, and it's failing. So this is one we'd be willing to short. At the same time, were it to recover here, it's had 1, 2, 3 days of a triple bottom low around 116.5. And if we had any kind of recovery in energy, you could get short tactical plays up here to 123 and then up to fair value at 126. So this winter and then an exceptional z-score like that finds symbols that are in extreme conditions. Let's put it that way. At the other end, something that's in the winter but which is above its red river is Caterpillar, which we already saw, but let's take another look at Cat. So Caterpillar is coming up out of its river, still in the winter, but has already made some of that recovery move that we would hope to see in Chevron. So that's how you can use this chart to quickly figure out where those elements in the Dow are with respect to their life cycle and the seasonality approach. No comments. Then finally, last one, z-scores of the regression line slopes of SPY. You can see that we're riding the upper channel of the river here. And the 90 is holding nicely at this extreme positive condition at plus 1Z. The 30 has rolled over and is back kind of into normal and starting to find support, ready to make another run. The 10 has pulled back and is ready to make another run. And so this is a market that is looks like this right here, the nearest neighbor, and was ready for another little bump. That little choppy support level is actually more favorable than this asymptotic move that we had at the start of the year. So this, after that asymptotic run and a big sell-off, the market has been grinding its way back north and rejecting the failure and the fear, and is now pushing up at all-time highs once more. I consider that to be favorable. All right, that's everything I want to cover tonight. This is Ken at Tortoise Capital. Keep your risk managed and your powder dry.